So I need to give you a little bit of a warning because President Trump's one big beautiful bill could be dead on arrival once it reaches the Senate. I want to address why this is, but first, in order to understand why the bill could be dead on arrival, you need to understand what is in it and what it costs. We'll get to that in just a moment, but you need to watch this video because I'm going to explain why what President Trump is asking for could be something that the Senate is not willing to give. So I'll break all this down in just a moment, but first, before I do, all I ask is one thing. It takes 2 seconds. Go ahead and hit that like button if you enjoy these daily updates, and now let's begin. So I know a lot of people are going to ask the one question. How could President Trump not get his agenda passed when the House and the Senate are both controlled by Republicans? Well, it's simple. Not all Republicans side with President Trump in his one big beautiful bill, specifically because of one number. And it's this number right here, the U.S. national debt. Do you see this number going down? No, it's not going down. It's continuing to go up. Every single second, it goes higher and higher and higher. Says the debt per citizen is $107,636. Debt per taxpayer, $323,050. Okay? Now, here's the reason this is a problem. It's a problem because what we have experienced over the past several months is a lot of cuts to certain federal agencies. And I'll show you this one as well. You can see the Doge clock. This is how much Doge has saved the American people. Okay, roughly $430 billion. Now, that's $3,833 per taxpayer. Here's the reason why this is a little bit off. It's because that number, the estimated savings from Doge's website is actually $170 billion. So Doge has not saved the amount of money that President Trump was expecting they would save. Unfortunately, that puts us in a tough spot. And it's all because there's more and more lawmakers in the House and the Senate that actually want to see cuts. And they want to see the reduction of spending. Look at this right here. This is what President Trump promised, right? Cuts to taxes. It says the average earner's tax bills would fall under House tax package according to forecasters. Now, this is actually pretty big because President Trump has asked for eliminating taxes on tips, eliminating taxes on overtime income, which the taxes on tips as of right now are only cash tips, so not credit cards and debit cards, unfortunately. As far as stuff for seniors, they want to do an enhanced standard deduction to increase it by an additional $4,000. That's significant. That would bring a little bit more money back to seniors that file their taxes. Okay. There's also additional deductions and tax breaks for businesses. We don't see anything in the new bill for the SALT tax deduction just yet, but there's reasons why. Look at this. It says the Titanic. Johnson predicts House's big, beautiful bill will sink in the Senate. It says Senator Ron Johnson said Wednesday he thinks House Republicans' reconciliation bill is going down and he's working to ensure its demise. Now, why would a Republican want to see a bill go down? Well, I want to read this to you. Right here it says, the one big beautiful bill. I think that's the Titanic, the third-term Wisconsin Republican said to a political live event in Washington. Says, I think that's going down because I think I have enough colleagues in the Senate that this has resonated with that say, yeah, we have to return to a reasonable pre-pandemic spending. Keep in mind that Congress has been spending like no other. There's so much money that has just gone out the door over the past several years. And there's Republicans to blame, there's Democrats to blame, right? Everybody's to blame. But here's the reason why it's an issue. The one big beautiful bill is projected to cost $3.7 trillion over the next 10 years. Remember this clock right here. it's going to cost us an additional $3.7 trillion, which is why this number is going to balloon up. We're pretty much be at $40 trillion. This is going to be devastating, according to many economists, that we need to pay the national debt down. Because right now, with interest rates where they stand, the interest alone on our debt is going to be $1 trillion this year. Yeah, it's crazy. Okay? It is absolutely crazy. But this is the reason why it's such a big deal. And this is why some say that Trump's one big beautiful bill will be dead on arrival. It's because President Trump wants to, again, provide additional benefits to seniors, provide additional benefits to those in the service industry for taxes as far as tips and overtime income. He wants to provide additional incentives for businesses to come and establish themselves right here in the United States, right? Build their business right here in the U.S. He wants to do that. He wants to ensure that everybody's working. So what's he doing? He's putting in work requirements for things like Medicaid. And some people are upset by that. I understand. Understand why somebody would be upset. Also understand why President Trump would want to do this. To get more people back to work. To get those able-bodied adults back in the workforce. That's what he's trying to do. Now, why is this potentially concerning? This is concerning because everybody's talking about all these different benefits in the one big beautiful bill. Okay? They're talking about the child tax credits. I talked about this as well. I talked about the child tax credits, how for the next, or until 2028, the child tax credit for all children will be $2,500. That's an increase of an additional $500 as of right now. But this child tax credit goes from $2,000 down to $1,000 on January 1st, 2026. So the extension or the enhancement of this would actually make it $1,500 more. That's a substantial increase. I said this was very positive for people with children, especially if you have multiple children. I have 3, right? $7,500. Incredible. And then what about things for seniors? Again, that $4,000 enhancement. Okay, that's good, right? There's something. So seniors are looking forward to that. And then people that are in the service industry and making money through tips and overtime, they're looking forward to no federal income taxes on their overtime pay or on tips from cash. That's pretty substantial. If you want to buy a car here in the United States, up to $10,000 of the interest will be deductible. Again, that's a very expensive car. If you're getting $10,000 in interest, you probably have like a $150,000 car. But again, it's something. So I bring all this up because everyone's looking at all the different provisions out there. What's coming? As soon as this bill passes, what do I get? Oh, I need to go buy a car because I can deduct the interest. I need to go buy a car because, well, there's going to be that advanced depreciation or bonus depreciation of 100%. They're discussing that. Potentially for planes. I don't know about vehicles for businesses, right? So all these people are going to get in trouble if they go and act prematurely. Wait, be patient. That's what I can tell you, because as of right now, the bill that the House approved, and again, they did approve this bill. They went all night, they approved this bill, it advanced. That's good news. The bad news is the Senate is now reading this bill, and they're saying this bill might not pass. So be patient, wait for the bill to pass the House, the Senate, and be signed into law by President Trump before you act. Again, you may have heard the saying, don't count your chickens before they hatch. That's this bill right here. So if you have any questions, please ask your questions down in the comment section below. But again, as we learn more about this bill, any future bills, or how we are going to be impacted here in the United States, I promise I'll bring you all the latest news and updates as soon as we get it. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.